Hello, I'm Adam Grimes and welcome to ChartSchool. This is being recorded on September 11th, 2018, and our topic today is day trading. So what I want to do is think about day trading in terms of how do you set up a framework for the next day? How do you know what is most likely to happen, what kind of day you're likely to have, and then also let's think, what do you do with that information? So if you're a day trader, then you obviously can buy and sell an index or an index product and make money. But if you're a swing trader, there's still useful information here. And so I want to think about how we might take let's say, day tradery information and use it if we're a swing trader. And in the interest of full disclosure, I have to tell you that I have not day traded actively in recent years. This has not been my focus. I've gravitated more and more to, many people would say, swing trading. I think that's a mistake because I would argue that swing trading is not a time frame. Swing trading is a style of trading where we're trying to take a clean piece out of a swing. You can do that on a 2-minute chart. You can do it on a monthly chart. But we know when most people say swing trading, you're really thinking about trades that last, I say, a few days to a few weeks. And that is where I've kind of found my happy home in terms of trading, both in terms of lifestyle and profitability. To me, it's just a much better way to be a human and go through life than sitting at the screen looking at every tick. And if you can make more money that way, why not, right? But I did for many years day trade very actively, both currency futures, currencies, and then also stock index futures. And the learning curve for stock index futures was particularly brutal. I think I kind of dumb lucked into some success in currencies. It was kind of there at the right time, but stock index futures took me several years to really figure out how to nail down profitability. And I'll tell you that what worked for me was a combination of doing what I do now on daily charts. So basically trading pullbacks in trends when you have trends, and then also fading extreme moves. And the problem, of course, is those are two contradictory approaches. And if you think you're in the wrong kind of, if you think you're in the other kind of day, if you think you're in a trending day, and you're actually in a mean reverting day, you're going to do the wrong thing. So the point of that ramble was that having a framework, knowing if the next day was likely to be a directional trend day, was very, very important to me. And that is still something that I emphasize in my work I do for both Market Life and Talon. We frame out the next trading day in terms of, do we expect a trending day or do we expect a mean reverting day? Also, it's not always possible to answer that question. There are many days where, you can always guess, but if you're being intellectually honest, you're going to say, I don't have a setup for the following day. I can't, it's a coin flip. There are times when we have very clear setups, and coming into this particular day was one of those examples. That's why I've chosen this day to make this video. And we're sitting here in the middle of the day, so we'll see what happens by the end of the day. This could very well be an example of where it does not pan out. So how do we derive a bias? Well, I start top down. And what I mean by top down is, even if I'm trading on the daily, on the intraday chart, on say a 2 or 5 or 15-minute chart, I still want to know what's going on the daily chart. Now, it might not be terribly, you got to be, let me say this right, you have to be careful about getting the wrong kind of bias. So I look here on the daily chart of the S&P, and I'm drawn to this bull flag. This bull flag is very clear on the daily chart. We're also holding above a previous breakout level, and we are in a bull market on the weekly chart. Okay, that's context, but it's very easy from that picture I just painted to say, okay, bull, 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 we're going up, we're going up. As a day trader, you have to be flexible. Yeah, because you may, within the context of this very bullish setup, you may have some really good intraday downtrends. Not may, you will. So you need the flexibility to capitalize on that. But what I thought coming into today, so kind of take the last bar off the chart and assume that we don't really have that, so you see what I was seeing yesterday. Just being aware that this bull flag is kind of like a lot of stored potential energy. You imagine somebody drawing a bowstring back. That's where the market is. So that's what I really draw out of this daily bias. I do think there is an upside bias over the course of several trading days, but if you're a day trader, even if that upside bias is right, we might go up and then go down, and you might have a great profitable trend to the downside, and then we still end up 3 or 4 days later. So the daily call was right. But again, I can't emphasize enough, you have to retain flexibility. So there's the daily chart. Here's an intraday chart. You're going to see the setup a little bit more clearly. So on the right is my 1 minute chart. We'll come back to that to look at today. But let's understand the setup that we see on the 15-minute chart. So just to orient yourself, you can see I've drawn lines to highlight the high and low of the day. So you can also see very easily, and I'll erase these lines, but you can see where each new trading day starts. And this little weird day here was Labor Day, so it was basically a U.S. holiday, a shortened day. Not much trading activity. You can consider it, or you can eliminate it from consideration, however you would prefer to deal with that. Because what we see here is this kind of look at the day. So this is, I'm just sort of sloppily highlighting the swing structure from last week. And it was odd to me that we had 4 kind of cookie cutter days in a row. And I pointed this out to my clients that on none of these days were we really able to say much about the next day, because we had days will typically do some variation of this where they're ranging back and forth, or this where they're trending. Just to be clear, there's really 2 kinds of days. There's the range day, and there are infinite variations almost of possibilities for a range day, and then a trend day. But the question is, how do we get a setup for this trend day? And I thought we had that coming into today, because yesterday's range here was a tightly compressed range. You put that in the context of the overall daily bull flag, and you start to say, okay, tomorrow might really be a trigger. Let's watch. Okay, so that's the setup. Now, what do you see when you come in the morning? One of the best things to see is where you open relative to the previous range. And a good setup for a directional morning is a gap opening. So let's not talk about today. We did get that. Let's look at yesterday. We opened right around the previous day's high. See that here? We opened right around the previous day's high. Now, that's a setup. Had we driven up off of that open, we would have been in a very bullish mode. And that is a clear sign to everybody. If you're a swing trader, that's information for entering your swing trades. Instead, that did not happen. We sort of consolidated. These are 15-minute bars. So you're looking at, here you are half an hour into the day. You're still kind of hanging out around the previous high, but I would argue once we lost momentum down into the previous day's range, then you're in the scenario of, okay, can we generate the momentum to target a run to the low of the day? Because this is a possibility, right? You don't want to get stuck in the idea that we opened at the previous day's high, so we are going up. That's one possibility. The other possibility is we open here and we fail, and we go through the previous day's low, or at least we go to the previous day's low. And it was pretty clear watching in real time, there was just no directional move. It wasn't happening. So then you come to today, and we have a gap down opening, and we'll drill down in the 1 minute. So right away your thinking is, well, if we can hold and drive, maybe we will really break down, take out last week's low, and we could be in a meltdown scenario. That's one thought in your head, but at least, these are 15-minute bars. So 15 minutes into the day, when you have this bar completed, it's pretty obvious that's not what's happening, right? So then you switch into the mode. If we've had this gap opening, we've had a failure, then what happens? You think maybe trend day, back into the range, perhaps even through the high. It's possible. It's not that unusual really to see a trend day that would take out yesterday's high and to completely traverse the yesterday's range. An outside day, you close strong. That could then set off several days of strong upward trend on the daily chart. We're not even talking about the international perspective because so you certainly could see stuff happening in international markets. Okay, so that's one thing to watch. Now, how did we know that was happening? Again, as I said, I have not focused on day trading in terms of execution, though I'm very focused on watching intraday data. This is not my time frame anymore. So to be perfectly honest, it's a different skill set than swing trading. And I'm sure if I went back into day trading, I would have a serious period of adjustment. I would probably struggle at first. But so to my eye, though, I don't necessarily see a lot of tradable structure in here, but I do see a lot of confirming structure. Do you understand the difference? That so I'm not saying like you would have made trades. You should have been able to make trades, but you could see and probably should have seen at the time, and I did see at the time that we were very much in a bullish, and we used that information to trigger into longer term trend trades. A couple other things to point out. So this is my NYSE tick indicator here, which you can see. I have it to paint light green when we make new tick highs, and the presence of ongoing tick highs is a pretty good indication that there's some strength behind the move. Now, you might want to use NASDAQ tick or a broad market tick. That's okay. Another thing that I found to be very useful, I have this is the ticky. So this is the Dow Jones 30, and I have it so that when I believe the trigger is 28 of those stocks tick up instantaneously, simultaneously, this paints a bar, and that typically points out short-term exhaustion points, which in this case did cap the high of that trend for several minutes. So those are tools that I used a lot day trading. They're still on my screens, even though I don't day trade actively. I do use this information, and we did use the failure of this gap opening to trigger us into some long trades, some long swing trades, and that's a way you can kind of take that information and carry it into other time frames. So I know it's a little bit of a rambling video, but I hope it was interesting. The key takeaways I would say would be understanding how to derive a setup for the next day, but maintaining the flexibility so you don't get locked into one resolution of the higher time frame. And one of the ways I do that is that when I teach people to trade, we study a lot about how patterns fail. And for instance, if you're aware of the way that daily bull flag could fail, would be for the emergence of strong downward counter trend momentum. That would tell you, okay, you got to be flexible, right? If you're a day trader, there may be a chance we end up short. There may be a very good chance. By the way, look what's happening here. So new momentum, and if we were day trading, we would definitely be thinking of that previous day's high as a target and very likely take a pause there. It's quite unusual that we would just rocket through that and continue higher. Anything's possible, of course, but would definitely be a spot where you'd look to lighten up and maybe take some profits. And if you did then get consolidation around there, also the time of day, we're heading into lunchtime, so there's a very good chance that we will be kind of flat here for the next hour. That's a very typical expectation. And that's another layer of information. I don't talk a lot about day trading, I guess, but there is a lot of information there with relation to the kind of order flow and structure we see throughout the day. So again, since I'll just keep kind of dropping nuggets out there, I guess. If we saw a big spike down in the NYSE tick, that would be particularly new tick lows in the middle of the day. Wouldn't be completely unexpected, but we would want to see that does not lead to driving downward selling. That's one of the typical ways that these uptrends end, but everything we see here so far looks pretty strong. And then the idea of setting up a trend day based on range compression, volatility compression the previous day. You can do that in individual stocks, currencies. Volatility evolves a little bit differently in currencies, individual stocks, stock indexes, commodities certainly. It's a pretty good indication if you have a tight range the day before. decent setup for a trend day the following day. Okay, that is all I have for you here. If you want to see more of my work, check out my blog, which is adamhgrimes.com. And you also might go to marketlifetrading.com and check out the trading course there. I have a trading course that is completely free, hundreds of pages of PDF exercises, 30-ish hours of video. So it's a very in-depth, very rigorous approach to trading. And check it out, marketlifetrading.com. Thank you very much.